All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market's been open here for just about 30 minutes, and we're just about to get the ISM non-manufacturing data released, and we'll go and take a look at that number here shortly. But you can see S&P futures overnight, kind of rallied as Asia opened, and then rallied again as Europe opened. And it really, they didn't hold the highs of these rallies, but, held pretty stable after those moves. And then we get the jobs report, and you can see that, we've had higher since that open. Pretty much breaking above yesterday morning's highs in the market before the big kind of downside drop that we saw yesterday. We talked about the drop and we talked about the metrics of this drop, yesterday afternoon. And, it wasn't all signs of big bad bear coming. It was, hey, you know what? A little pullback, but bears really need to see a lower high before stepping in aggressively. If we kind of back this out to a 1 hour chart here on S&P futures, you can see what this looks like, right? So, bears do have potential for an actual lower high to come in, but there's still, plenty of room for that to happen. What we have seen this week is we have seen the average true range on the market start to increase for the first time in a while, and getting just a little bit of increased volatility in some things, which is definitely nice compared to what we've had. Let's go take a look. I want to show today we're going to have the ISM number here in a minute, but take a look at Fed Parade. Charles Evans, from John Williams, James Bullard. It's a Fed parade here today. In terms of speaking, this has become normal for the Fed after FOMC meetings to just have this kind of parade of Fed speak, and it's going to continue into next week. But we have a lot of that. We have a lot of that here. Happening later on today. We have seen the path of least resistance for equities when Fed officials have spoken be higher, but we saw that change on Wednesday with Chairman Powell. Very interested to see how the market reacts, to the different rhetoric that we hear from the Fed. And I do think that will be a very good tell into some of the things that are going on and some of the things that could happen in the near future. All right, here we are. ISM data, right? Generally, you don't get a big reaction on ISM data. On the non-manufacturing, it's one that the market doesn't react to aggressively normally. But that is being released right now, is coming out. We'll go and take a look and break it down. But before we do, the jobs number, a very solid jobs number. A very solid number. One that, even in Econo Day, they, here, I got to show this to you. I got to chuckle out of this. But here under the employment situation, we'll pull this up. They said, the sound you hear is the economy revving up. Okay. All right. Yep. And you see some similar arguments out there on different sites here today talking about productivity, that productivity number we had earlier this week that looked at January, February, and March and not April. So it's one where, okay, yeah, the economy is revving up if you look at it with a couple data points, and the economy is contracting significantly if you look at some other data points. And it's definitely a mixed bag out there. You do see in this number average hourly earnings year over year change is a little lighter than expected, but not that huge of a deal there. Average work week fell a little bit here. So this is... There are a couple small holes in it, but it's a very solid number. It's a very solid number here, and one that takes takes some of the jobs fears away, and some of that had existed with some of the numbers we saw earlier this year. Okay, all right. So ISM data's in. You can see not a whole lot of reaction here to it. Didn't expect to have a ton of reaction, but let's come in here to the Institute of Supply Management. And then we'll go talk about playing a potential reversal. And I say a potential reversal. And there's a reason I decided to jump on video at this time rather than, at the open or, rather than a little bit later. And that is because a potential and playing a potential reversal on Jobs Friday is not something you do right out of the gate. We need a few things to happen. And we have some of them happening, but we'll take a look at the rest here. So the number came in at 55.5, which is showing growth. Above 50 is showing growth. But compared to last month, it is a little bit slower than last month. Business activity and production did ramp up. New orders fell. Employment fell, which is really interesting. We have a pretty strong jobs report here today, but yet out of the ISM non-manufacturing and the ISM manufacturing numbers this week, we see employment dropping in both of them. Really interesting there. Supplier deliveries dropped, inventories rose. That's not a great thing. Prices dropped. We saw this in the manufacturing number. Backlog of orders, fell. Where we're seeing a big difference from the manufacturing number here is, exports and imports. Exports and imports are very strong in this number. Very, very strong in this number. And remember, exports and imports are what really fell big in the manufacturing data here. So it's a pretty ho-hum report. It's not something that the Bulls can look to and say, hey, you know what, this is massively bullish, but it's also not something that the Bears can look at and say, hey, this is massively bearish, in terms of the breakdown that we see so far. You can kind of see what the tendency of this number has been. The 12-month average is 58.4. The high is 60.8. The low is 55.5. Well, that's this month's number, right? So, it's a 12-month low on the number. It's still showing expansion, but it is a 12-month low for the ISM data. So, if we come down to new orders, you can kind of see what this looks like here. It is one of the lower numbers for new orders, but January was a little bit lower here. And you can come in and look at all the breakdowns if you would like. But, that's, so I look at the data and go, okay, next. Right, it slots in there. It doesn't change any of the arguments here, and one where okay, next here with that. All right, so let's go and talk about Jobs Friday. Right now, Jobs Friday, you've heard me comment many times, has a tendency to have a heavy reversal in it. Meaning, if the reaction to the jobs report is lower, there's this tendency to go higher. And if the reaction to the jobs report is higher, then there's this tendency to go lower. Now, this has changed over the years. Over the last several years, that tendency has been broken a lot. It hasn't been a great tendency. But over the last 4 to 6 months, we've seen it start to come back a little bit. So I'm willing to start looking at it, willing to start saying, all right, can I set it up and can I trade it? And I have my trade order already in. I have my trade order already in for puts on the market. But it is contingent, right? It is contingent, and I have it contingent on the SPY, so we can come in here to this chart here. But it is contingent on a certain level. And that level is 292.40. Okay, 292.40. Need to see 292.40 break in order to go and jump into a potential reversal trade here. Okay? Now, if that trade triggers, right? If that trade triggers, my stop now becomes the high of the day, right? That's what my normal stop would become. I most likely, because that is, pretty far away now with this kind of flush up that we just saw, I'll probably tighten that manually if the order fills. But let me show you why I've set it up that way. To play for a reversal, number one, we need to see that the market goes the direction of the overnight element when we have the jobs report. What do I mean? Well, last night, futures were higher before the jobs number. The jobs number created an upside reaction. Same direction. That's what I want to see. If I'm going to play for a reversal, I need to see the same direction on those two things. So if I'm going to play for an upside reversal, I need to see overnight futures drop. Okay, fall. I need to see the jobs reaction then be negative. Here this morning, we just actually get the opposite, right? We get, hey, overnight futures positive, jobs report up, and there we go. Number two, I need to see the market open and break the reaction high from that jobs number. That reaction high on that minute that we get the jobs number. This is the algorithms, popping in. This is the computers jumping in. This isn't humans pushing the buttons. This is the computerized level here. So I need to see that when humans start to step in, they trade it above the reaction high for the jobs report. Check. We got that, right? We got that come in. Then the market opens, right? And market opens right here. Most times in the first 30 minutes, we're not really going to see anything. Most times in the first 30 minutes, I don't really want to go anywhere. There's one exception, though. And that is if this reaction high that we saw right here gets broken. The reaction high from the jobs data. If that gets broken, okay, I'm willing to step in a little bit earlier. We didn't quite get that right here. No, we saw the market rally on back. Yep, it's pulling on back. And that level is still the level where I say, okay, you know what? Now I'm willing to play a potential reversal. It's that simple. It's, you got to have the right setup. You've got to have, to play a downside reversal, you have to have overnight futures up. You have to have the jobs report reaction up. And you have to have the market open be up, right? You need all three of those elements to play play an upside reversal. You need all three of those elements to be negative, meaning, a drop overnight futures, drop on jobs report, and then a sell-off right at the open. Then you start to break the reaction high, reaction low for the jobs number. There's the element that gives you some confirmation to say, hey, you know what, this is worth jumping into. So that's the setup. It's pretty easy. It doesn't require me to look and go, well, is it 29.37 or is it 29.39 or is there support here? Is there resistance here? And all of that mumbo jumbo doesn't require any of that. Now, today, we have something very interesting coming in. We have a very high volume candle that has come in here in the first little bit. Now, this came in about 2 minutes after the ISM number, so some of that could be reaction to that. But we saw some pretty heavy volume right here at 29.38. And that just suggests to me the market's going to have a hard time closing above that level today, right? That's all it suggests to me. Doesn't suggest, hey, big bad breakdown, but it does suggest that, there may not be a ton of upside here as well. So I don't have a breakdown. I also don't have, I also look in and go, man, some of the upside is going to be limited from right here. And we'll look for some of that to change. We're seeing some really good strength in certain areas. Adobe snapping back very nicely. Alibaba, snapping back very nicely. Amazon up $50 here this morning, trading up very nicely. There are some real nice pockets of strength out there. You can see Amazon, great earnings report. We talked about it. Didn't really get a ton of follow through. Has kind of bled a little lower in the last few days, but very nice gap up associated with it here this morning. So very positive price action. Alibaba, same thing. Breakout mode. We talked about it, got the signal earlier this week, and in absolute breakout mode right now. with Alibaba, and yeah, it's been a little volatile. And I know yesterday it was down a few bucks and up a few bucks and all of that, but still in a very very solid position there. I'm very interested to see how gold miners trade here today. So far on the open, yeah, there's a little gap up, but it's nothing, nothing to write home about. We talked about these earlier this week. They probably need a few sideways days to consolidate some of the dip before getting a fresh upside signal. So very interested to see that. We're seeing a little snapback in things like Alcoa. Alcoa broke into new lows here on Wednesday. Snapping back just a little bit here with U.S. Steel. U.S. Steel, massive volume yesterday. Huge gap up here today with it. So that's kind of helping to push Alcoa a little bit. There have been a lot of options trading or option elements going on here with U.S. Steel. And U.S. Steel is one of those stocks where, it's how do I put it? It's inexpensive, right? But the bears have just been piling in. The shorts have just been piling in when it comes down to it. And, this reaction obviously is on earnings. And it was a pretty good earnings number for them. In fact, I'll show it to you here. Sorry, let me go to the right site here. Estimize. There we go. I mean, they blew away the earnings number, right? The earnings estimates, the actual earnings estimates, they blew them away. 47 versus a consensus of 17. Pretty solid, right? They actually year over year growth in earnings, not too bad, right? Not too bad. Better than some tech stocks that have been flying higher, but they also did it on a beat in revenue. And some revenue growth, year-over-year revenue growth. Now, the worry for U.S. Steel is what happens in the future. So that is obviously the concern. But big beats on both earnings and revenue here definitely has the stock cooking here to the upside as the shorts are piling out or having to jump out. On this type of number, the initial reaction has to be sell first. The short position, right? This is still 13% short. Pretty big number there, but you can see the PE ratio of 2, forward PE of 6, book value per share 23. I mean, it's trading so cheaply, and for a company that actually has positive earnings and actual revenue growth, you don't see that very often. But that is the case here with U.S. Steel. Thanks for hopping on. I'll be jumping on here give me about an hour and 15 minutes. We'll do the next indicator series video. We'll talk about the ATR here today, and how that kind of fits into things, the average true range. We'll kind of break that down in a little more depth. That's one of the indicators I talk about a little more often than some others, but it goes with Wells Wilder and some of his stuff. So I want to break that on down here with you today, and then a little later this afternoon we'll do a preview to the upcoming 100K challenge. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you later. Take care.